Hey guys, Justin here from Simplified Investing. I hope you guys are all having a great weekend. This will be our weekly watch list video highlighting the 5 plays of the week that we are watching, as well as a key market breakdown. Hope you guys enjoy, and if you did find value in this video, if you give it a thumbs up and subscribe, it would be greatly appreciated. Thank you. So, getting things started, for those of you who have watched our previous videos, the first thing that we like to do is break down the market. And what we're going to be using, as we have done within our previous videos, is going to be using /NQ, which is going to be tracking the NASDAQ market. And a lot of you guys are going to be trading tech stocks, and that is why I'm personally going to be breaking down the NASDAQ market. Let's get a quick little analysis of what has happened recently and what we're seeing in the market. Looking at this from the daily time frame, still in a clear downtrending market. There is no clear sign of reversal yet. We have gotten some bounces, but no clear conviction of a reversal. You guys can see these series of higher lows and making lower lows. You can see that, or lower lows, excuse me, not higher lows. We're making this downtrend series pattern sequence of lower lows here. And we are getting weakness here on the market. So something to note, we have not gotten a clear reversal sign yet on the market. Now, there is going to be an FOMC meeting this weekend. This is going to have a very, very high importance. One of the most important meetings we've had in a long time. And it's really going to be, what is the course of action for interest rates? The obvious answer is that they're going to be raising them, or it's likely that they're going to be raising them during this meeting. Probability of 25 basis points, but we have to see what their future comments are, what their plans are, especially with this Russia-Ukraine escalation. We don't quite know how the Fed is going to react, but FOMC meeting this weekend, or this week, is going to be very, very important. Now, looking at the NASDAQ market again, we tested this consolidation region. This channel right here, this box that you guys can see shaded in gray, is where we've stagnated a lot. And last week we got an entire week, or 2 weeks ago, we had an entire week of consolidation within this channel. So when you have that much consolidation, this tells you the imbalance that you do have above between buyers and sellers. There was no clear breakout. And what exactly do we get? Well, we get a breakdown here on 3.7. We retest this 13.820 level here on 3.9. Coincidentally, we reject it. Now, the same thing happened on 3.11. Pre-market on Friday here, we tested this 13.820 level, and you can see the selling off. Now, one sign of hope is that we did have very low volume here on Friday. So nothing that was selling off on strength, which would make a bigger concern than something that is selling off on lower volume. Still a very, very weak market here. I would like to see that 13.820 region break for the upside with a support down here at this 13.206 level, and the strongest support down here near 13,000, where we formed a reversal here on 224, and I'm expecting a bounce here if we do pull into that region here at that 13,000 level for a bounce. So levels to watch, 13.820 is going to be crucial here for the upside here in the coming week on the market. First play, one that's been a secular strength, one that we've traded quite a bit recently, and the reason being is we're following the flow, following the strength, following the abnormal volume, and ticker symbol OXY fitting within this. Energy has been one of the only sectors that has been in the green all year, and it continues to show relative strength here. On Friday, we had the NASDAQ down over 2%. OXY almost closed in the green here. So what am I seeing here? We get this advancement on 3.4, strong buying pressure. Also strong buying pressure here on 3.9. You can see the highest volume we have traded all week, and we're getting lower volume consolidation candles, which is healthy in a trend. So anytime you look at a trend, when you see consolidation, you always want to see lower volume than you do in the advancement candles, similarly to the one that we got on 3.9 and also here on 3.4. So OXY, looking for a breakout through this 58.60 region. That will be a level I'm watching intraday on Monday to scalp this one to the upside, with potential to see 60 plus on this in the coming week. Continues to be the strongest sector within the market. It should be one that is of high importance on your watch list. Watching that 58.60 region to take this one to the upside here on Monday, with potential to make this through 60. ROKU is going to be the second play. You can see we got a gap down here off of earnings into 102 before we had this strong move all the way up into 142. So $40 off the low, an incredible move off these lows on ROKU. And what have we seen since then? We had a weak candle here, rejection on 228. And guess what? Same thing as the market. Continued selling pressure here. Sellers in control of this one here on Roku. Personally, level of interest here is at that 102.60 level here. If you guys were watching this one on 218 post earnings, heavy bids at this level. It continuously failed to break this level. A lot of buyers at that level. If we do get dormant buyers and break through 102.60, I will be eyeing to take this trade to the downside. Sub 100s level here with the next support down below at 96.82. So something to watch here, but a fading move, selling off with the market, continued weakness here on Roku. Waiting on any abnormal volume for conviction. Again, we aren't trading any abnormal volume. We're trading half of the actual 30-day volume here. But waiting, seeing if we can get volume to confirm below that 102.60 region to take this one to the downside within the coming week. DOCU, one that we've had two excellent plays here on Friday, and really what I'm seeing here, let's zoom out of this one from the weekly time frame perspective, because you can see we're trading at the 52-week lows here following earnings. Gapping down 20%, trading almost as much volume that we got here on 12/3 with this massive gap down. Another gap down here. Poor earnings, poor guidance, not a good outlook for the company, and the market is discounting that into the share price. So you can see we're trading 10x the amount of volume here. We do have to zoom out to the weekly chart on this one, as we have not tested levels here since back here in March of 2020. So really what I'm seeing here is we're testing the 7260 region that we did get back here, where we formed consolidation before this big bull run up into 314. Now what we're seeing here is downside selling pressure. We're coming into that support. I do think we see further lows here on DOCU within the coming week. Now, one thing to watch here is going to be that 71 level. Would like to see that whole dollar psychological region break for continued downside here in the coming week on DOCU. If we do get that downside move, I will be watching the tape to see if we can get an entry here on DOCU to the downside within the coming week. But again, one that's looking very weak here. Continued selling strength here within this sector, within this stock, due to very poor earnings here last week. Fourth play is going to be one that's also been hit down very hard. It seems to be a very common theme here lately, simply due to the nature of the market, especially with these growth stocks. These growth stocks have been demolished here lately. They have not formed any signs of reversal. They've been hit down very hard. AFRM, one of them, if you would have told people that it was trading at $176 in November, and now we're trading almost sub 30, people would have thought you were crazy, but here is the market in 2022, and that is the common theme amongst growth stocks. So really what I'm liking here is a breakdown to these 52-week lows. We do have to watch this one intraday, as we are trading at 52-week lows. If we do zoom out on the weekly chart here, you can also see we're trading at all-time lows. So this is going to be one where you have to resort to intraday levels. There is no past market data to give you levels to watch. So if we zoom in here, likely $30 is going to be a psychological whole number. Institutions will be eyeing this one at. That is going to be a clear support here. It could very well shake out of that level, but watching that one here in the coming week, you can see these continued lows here. We're breaking this support that we have below at 32.48, where we bounced here with some buyers on 224. We also bounced here on 3.8, failing to hold here, breaking below that. Two setups here, continue lower lows through 30, or if we get a bounce back into that 32 region, if we do reject that and we get some selling pressure there again, a good spot to take this one to the downside within the coming week. Last one, secular strength here, prime example of a cup and handle for those of you who are just starting, maybe you're new here. Here's an example of a cup. Here is the handle, hold, retest on high volume, indicating that the sellers failed to break this handle formation here at 82.50. Now we're trying to make an advancement move to the upside through that 91.51 level here. So if we do get some selling pressure, 82.50, a strong support to bank on below. If we do break that, obviously a failed setup, but if we do hold that, looking good here for the upside. Personally, I'm watching this one through 86 to take this one to the upside with potential to see that 91 region within the coming week. That being said, that wraps up our weekly watch list for the week. If you did enjoy this video, if you could give it a thumbs up and subscribe, it would be greatly appreciated. Again, if you are interested in getting our private course, alerts, and more, feel free to check out simplified-investing.com today. We would love to have you guys on board. Hope you all have a great week and a great weekend. Thank you.